Good afternoon, traders, and welcome back to today's daily analysis for the US dollar index, which fell on Thursday, giving back some gains from a strong week. This pullback was due to the profit taking after mixed US economic data, despite a solid Standard and Poor's purchasing managers index report indicating a strong business activity. The Asian markets are preparing for a cautious start, influencing the rising US bond yields and reduced expectations for significant interest rate cuts by the Federal Reserve. The dollar initially rose to a 3-month high, but faced resistance around the 104 mark. This week, the index climbed above its 200-day moving average of 103.81, reflecting a positive trend. However, with the 14-day RSI above 72, a correction could be on the horizon. Support levels to watch are 103.81 and 103.40. If the dollar index surpasses 104.57, it's nearly 3-month high. It may aim for the next targets of 105 and 105.01, which is July 11th high. And then the crude oil struggled to maintain its gains on Thursday, hovering around $71.50 per barrel. The market is reacting to the rising geopolitical tensions after the U.S. Secretary of State Anthony failed diplomatic efforts in the Middle East. Concerns about the potential supply disruptions from ongoing conflicts have supported the oil prices, even as the US dollar index surged to its highest level since late July at 104.57, which generally reduces demand for dollar denominated oil. Despite a brief rebound above $70 this week, the fundamental issues remains an oversupply of oil. Prices may fall back to $70 or lower in the coming days. Key resistance levels to watch are 72.22 and 72.30. If the crude oil can close above these levels, it may target 73.04 and the 89-day moving average at $74.60. On the downside, if prices drop below $70, they could move towards 68.15, the month's low, and 66.18, which is October 1 low. And for gold, after a sharp correction on Wednesday, the prices recovered and traded above $2,735 on Thursday. This rise came as the 10-year Treasury yield retreated after 3 days of increases. Earlier in the week, gold reached a record high of 2,758.50 before declining as the dollar maintained its bullish momentum. The financial markets are currently in a risk-off mode with global stocks under pressure, particularly in the technology. Speculation around the rising government bond yields has intensified as the US presidential election approaches in over 2 weeks. With no clear front runner yet, gold is currently above the 23.6% Fibonacci retracement level at $2,721.90, but may test the 38.2% level at $2,699.20. The RSI shows signs of overbought conditions, suggesting potential further declines, especially if the prices fall below this week's low of $2,708.80. The moving averages remain significantly below the current price, indicating a long-term bullish trend, with the initial resistance around $2,740. The focus will be on re-entering the 2,750 to $2,758.50 range. And that is all for today's daily analysis. Happy Friday, traders.